everybody. Hello. It is currently 11:59 p.m. October 1st, 2024. So, we are looking here at the monthly dollar chart, and this is probably the most important, well, not the most important, but there's a reason I'm showing this first, is because I always base majority of my analysis based off the dollar. If the dollar looks like it provides a catalyst to my trade behind S&P or Nasdaq on a higher time frame within that 1 to 2 or 3 day allowance of symmetry in the market, then I like the dollar for that. So it's like that barometer. But I want you to go to yesterday's YouTube video I posted and just watch everything I said for the dollar, and then how it panned out perfectly. So if I'm being completely straightforward, I called out the dollar and I said I want to see the dollar go higher. And if you watch the rest of the video, you'll see that I also said that I want to see S&P go higher. So it was kind of a conflicting analysis, but today, during all of the price action, I was able to kind of maneuver through that intel and go long in the PM session. Today I was with ICT in his live, pushing some buttons with him, and it was good. I learned a lot, so I'm going to be talking about that today. I really like the new drill that he showed us, because originally I was pushing like one or two buttons, and there was a lot of pressure behind it, like a lot of pressure. So like knowing that I had that 2 strikes and you're out rule for myself, where if I take 2 losses I'm out. It was like, it just felt very suffocating, and so having that room for 10 trades and not worrying about right or wrong at all, like despite the what's the word, P&L sort of fluctuating. I've actually kind of, personally, that was an objective of mine, or an adversity, but after listening to some of the podcasts or spaces from 2023, one of the podcasts where it talks about turning adversities into objectives, I really like that one. So I wrote down a couple things on my wall of like weaknesses that I find within trading, and they weren't super in-depth things. It was honestly just genuinely things I saw on social media that I noticed within myself. So it wasn't a super deep dive, but I noticed I was very reactive to P&L and those fluctuations, until it was sort of there was like a spotlight shined onto it, like that fact that a lot of my anxiety, a lot of my stress during my trades was coming from that only, and that deep rooted from uncertainty, deep rooted from emotional damage, and deep rooted from scars in the past from trading. And so the best way I overcame that was, almost a full year of just tape reading, and then slowly easing into demo trading. So it's only been demo trades, and I am bored now. that's the that's the truth. Like I'm actually kind of getting bored. But I stuck to it much longer than I think anyone that I know of has, and it's paid off very well. Like it, it feels like game theory is being applied very well. If I have the correct understanding of that, it's just one outcome or the other. It's nothing else. Like right now, what I see on this chart is previous month high or previous month low. That's the first thing. And what I was looking at yesterday on that chart, um not this chart, but yesterday at that time, it's very important. So these are things you have to train your eye for. When we were down here trading much below what we are at right now, the next likely or probable move for me seemed higher, and that's on a monthly chart. Like it wasn't based just off of this, but that imbalance that has been formed now, that's a magnet. Um, Additional to that, we had been working lower all these months. So you take 2023 and you see that we went up only to come down. So I guess the tone of the marketplace right now is heavy. So the fact that this low was a sort of intermediate term low, or even just looking back a long term low, there's a lot of liquidity resting below here. Sell model starts over here 3 months ago. We go down, down, down. So lower low here relative to this one, and then another lower low here. So this is important because you'll see on a weekly time frame, when you go into yesterday's video, I point you out to these levels. So here's the weekly time frame, and right here is where I want you to focus for this video. So I mentioned the low here, and then how we kept digging lower. So we had a low here and then a low here, and you can see the heaviness in this candle. So it's expanding lower and continuously making lower lows. We were going into a new month. I mentioned this failure swing here to take out this low. So we had a low, lower low, and then higher low. And I said, I don't know if I said it word for word now, but mentioned the draw higher, and I said these when it's clean like this. Like I don't know what this is called in retail. I think it's something like a pinball, something to do with bowling balls or something, some bowling pinball. I don't know, but trendline liquidity gets attacked. Everyone is bearish from here, so there's a lot of liquidity resting above these highs in the form of buy stops, and the minimum threshold, just to even just frame the idea, is this high on a weekly chart. New week opening gap, you can see that is also another catalyst for why we drove up higher, is because you see we opened up here and we dug lower. So that opening price and then that wick lower, and that failure to make that lower low was significant to me. So my next opinion, or my next draw, or my next favored move or favored market condition, like I said, was risk off. So I wrote specifically in my notepad that if we go above the mean threshold, which is 100.608. So that's below this new week opening gap, just below it, then I'll be bullish. So, and that would provide risk off, which means dollar higher and all assets lower. So that would mean NASDAQ, S&P, and things like crude oil, things like euro, things like British pound, and gold. So here we have that delivery. We open, we go lower, where daily fair value gap, July 20th, 2024. You'll see that level on my chart yesterday. And you'll see that I mentioned, or you'll hear that I mentioned the high and the consequent encroachment. I said throw your gradients on that, and that's good for buys. So essentially, I saw no reason for it to open here and then come back down into this consequent encroachment. If it did that, next I would have been looking for this new week opening gap. But it didn't, so I mentioned this candle. This long, big candle. Random, right? Like, at that time we were 1, 2, 3 days of a look back period, and so when I was looking at this at the beginning of the week, we were on this candle, so I was looking at 1, 2, 3, so that was inside a 3-day look back, so it holds importance to me. We had the low, we had the mean threshold, and the high. And so I said, if we go above the mean threshold, I'm bullish. And you can see that all the confluence of those levels, the consequent encroachment of the daily fair value gap, new week opening gap, the high of that daily fair value gap, and then the breaker mean threshold, and targets above the high over here. So it ended up reaching up all the way up here, trading through this new week opening gap and up into this one. So right now we've just opened and traded into the September 8th new week opening gap. Here is that NASDAQ monthly chart. Like I said, I typically do not show a monthly or log a monthly chart intra-week, so Monday to Friday, but because today is the first day of the month, I like to look at that, and I like to shift those levels. So usually Sundays and the first day of a new month. And then if I ever need to reference it, but in terms of logging, that's when I just throw it in the folders, but otherwise I don't. And here is the weekly chart. So you can see came down into that weekly fair value gap. All my trades were done on the NASDAQ today. So you'll see executions and recaps, all demo, morning session with ICT, and the afternoon session was all me alone on my phone at work. So not the greatest conditions, but when I do have a little sneaky time where I can look at my screens on my phone or whatever, I try to just tape read. Usually, once again, I don't throw any trades on my phone, but I really wanted to like partake in the homework assignment today. So I didn't want to miss out, and the opportunity, uh, there was no one around, so I had time. Which, saying that now, it's it sounds super unprofessional, but that's just the reality. I wanted to participate in the homework assignment. I wanted to, like, I've missed out enough in like not looking at markets or not trading something, even on demo. I don't really care about like if I miss out on a demo trade. I don't care. Like I don't care if I miss out on a move at all. It's probably the last thing that is like on the front of my mind. Like if something happens in the New York session, I don't care. Even if I was watching it, if I'm wrong, if I'm right, if I miss it, I do not care. And that really helps me stay cool, calm, and collected. Like when I'm watching, even when I'm not watching, like it just repeating that in my mind, and the uh, additional support of like seeing this happen every single day, like the confidence that it brings to you or me, seeing it every day. And every day I'm working like on back testing always. Like it's ingrained into me. So I don't like, how do I say this? I've done it so much, and not even that much. Like it's been a year and a half, to the point where I'm trying to progress now. Like that's it. That's the point I'm trying to get at. So me trading on my phone, um, on a 15-second chart, I actually really enjoyed it. Like it was very smooth. It was very fluid. I didn't feel any resistance really. Like I did get stopped out, yeah, but I kind of knew already what was gonna like take place, if that makes sense. I had my draw and I knew my target. It was a matter of sort of timing it and just waiting. So that's the only improvement standard that I could have made. I did kind of get screwed a little, just because of the fact that, I'm at work and I have to turn off and on my phone. It's not even funny. I don't know why I'm laughing. It's kind of annoying. I have to turn off and on my phone, and like kind of keep it on, but like put it on the side of my thigh, I guess, or whatever, like my hip. And then as soon as I pass someone, like I look at it again, and it's not fun. But the way I see it is like I'm not emotionally attached. I'm not risking anything. If I'm just able to like keep the phone up on my side and just even keep like one eye on it, like in my head, one eye is on like work and one eye is on my chart. Like not really, but that's how I think of it. And I really enjoy it. If it wasn't for the fact that I could be able to like that I can do that, I probably wouldn't even be there. So yeah. Weekly chart for Nasdaq. Let me see where I left off. Yeah, so we had those monthly levels for August that shifted, and now we're on a weekly chart, like I said already. So we had the weekly volume imbalance. So from September 22nd, 2024, that candle. So those levels are 20,040 flat. The consequent encroachment is 20,027 and 3/4, and the low is 20,015 and 2/4. So, moving down to a daily chart, I kept this here on purpose because it's good insight. So even though I wanted to see the market go higher up here, I still had allowed for it to trade lower. We had this order block here. It got invalidated, right? Technically, that's what it looks like. But it happens sometimes to me where these levels actually do look like they, got disrespected, or we've lost, quote unquote, bullishness. If someone were to watch yesterday's video and just leave off there, I see how it can easily be mistaken. But if you were here from the start of the week, or if you were here even from last week, which you'll have more insights on, this balanced price range. So I mentioned that I like the upper quadrant for this candle. So when we were trading here, it was on this candle, I'm pretty sure. We came down into the upper quadrant and rallied away. Now we returned back here, and the fact that we had traded down after the 9:30 opening and continued trading lower till about 11 a.m., 11:15 a.m. There were some things I was looking at on ES, and that allowed me to go long in the PM session, which you'll see. So let's get moving. So the opening range gap, you can see those levels here, 4-hour chart. This is the sell side ICT mentioned real time on his live stream today, so that was something I didn't really see. But I was about to scroll out on on this, but this is a presentation, so let's see if it's in the next one. Yeah, so hourly chart here, and we did have this new day opening gap right here, but this is from a month ago, so not within a 5-day look back. But because the dollar went higher, and because we were looking for the dollar to go higher, the main point that I wanted, or I want you now, for anyone who's watching this, to catch, is that I said I'm going to wait for the dollar to book those levels and then see and assess where indices are likely to go. And at the time, I was looking at the ES chart, so you can go there and find that. Meaning, initially I wanted to see the dollar hitting those levels, so that would be the high of the breaker, so 100.991, and then I would want to assess the NASDAQ and see where's the next draw. And so kind of using that very simple if then sort of thinking and time and price analysis, that is how I came to my PM session bias. And so I'm not even gonna kind of say that I was long, or sorry, not long. I'm not gonna say that the trades I did in the AM session were me, because I was just simply attempting to follow along with ICT, and I wasn't able to get in sync. And honestly, right when he threw that trade at 926, I don't know if anyone picked up on this, but I kind of figured what he was doing. my personal belief is that, I, first of all, I think what he says he can do for Robin's Cup, I think he can do it. There's no doubt about it. Like, what I have learned and what I see the potential for, like my projections, I can't even imagine what where he's at right now, like in his understanding and skill level. And it's, I see people in the comments and they're like, "You let me down, man. You let me down." But that was a bullet to my chest. But like, I don't think people understand, or maybe I don't understand. But my personal belief is that it's just theater. Like, I think that as soon as he took that trade at 926, I kind of figured that, like, I didn't figure, but like I had intuition. I was like, why is he throwing a trade at 926? Like, why 4 minutes before the opening bell? And I don't remember exactly what happened to that trade, but he kind of, like, I don't know the word. He teased everyone. Like, I think he purposely threw in a couple losing trades in there, and he might have mentioned that. It's a very easy way to justify losing, but dude, I don't know how people don't see it. That's all I'm gonna say. And that 926 trade, that kind of gave it away to me. The 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 trade that went on at 10 a.m. where he supposedly put on a trade without knowing that there was news there. I also think that was just another selling point, like kind of twisting the knife. So that's my personal opinion. Am I saying that he's gonna win Robins right now? I don't think so. Like, I don't think anyone is gonna step up. And I don't blame him. Why should he step up if no one else really has? So, yeah. I don't need him to win, honestly. Like, I really don't need him to win to believe this. That's it. Hourly, what was it? So here's that True Day Open. You can see the high forms above that. Alright, so here's the 15-minute chart. And I've drawn out the hourly dividers for the morning session. And then I'll dig deeper into the PM session and how I utilized this low and this high, and how I knew this one is safe, and how this one is going to be attacked next. So then we drew up here later on, and then sort of just pulled back down lower over here. And I really like these setups where it delivers completely into these levels. So this is the rejection block, the wick consequent encroachment, and an old low. So we have 3 PD arrays, delivers into that. 11 a.m. prices in a low, stalls, comes back down to the low, and then expands higher. So here is where I was focusing. 115 going into 130. It was my exact focus, and you can see that in terms of execution or movement, not execution, these are probably the most exaggerated price range after this. So you were going short here, and I was going long here. And not entirely. It wasn't like one shot, one kill from here to here. Like, the bias was short here, and the bias was long here. In the morning, I was working with ICT, so it was a couple shorts here. I missed out a few. I missed out the big one, which I could care less. Like, I really do not care. I'm not getting anything out of this except for experience, and missing a trade is just another data entry for me. Like, it's just more insight, and that's how I like to view it. That's how the way keeps me like that's just what keeps me focused. So it doesn't keep me in the past. It just allows me to flow with price, and I believe that's why I kind of am so comfortable with the 15-second chart. Like, that is it was like butter today, but let's see, opening range gap September 30th. That's from Monday's opening range gap. So you can see we melted through that on the 15-minute chart, failed to even ever come near it. 5-minute. So 7 a.m. to 11 a.m. You can see if we were to, well, actually that'll be on a 1-minute chart. Where should we start here? Let's just look at this AM session start and then the end over here. So it can be 11 or 11:30, but I'm just kind of dividing these hours over here. So you can see after 11, we price in a low over here, and we rally higher immediately, creating an imbalance here, and pricing in a high here. So I like the fact that it touched this, and then came down one more time, and created relative equal lows here, ran it, and priced in the low at 19,844.50. So that's going to be important, so remember that. Then we have this 5-minute wick here, where I expected this to eventually act as inversion, as a sort of best case scenario. Inside this range, there was about 2 or 3 entries, and I want you to learn, if you're going to learn anything from here, or even if I'm watching this again, the one thing I learned from here is knowing when not to push it. It kind of sounds silly, but it's a downfall for everyone. And while, I know I'm never going to 100% overcome that entirely, it's always going to linger in the back of my mind to continue pushing. I think today was just a good example, simply because I didn't get hurt. I still kept my losses small. I still kept my wins big. So very simple, but not easy to do, honestly. So here's the 1-minute chart, no annotations. So we went from a 5-minute to a 1-minute. So we're looking at from here 7 a.m. to 11 a.m. And here are the dividers. Now you can see we have a 30-minute divider inside each hour. So I want you to focus on 7 a.m. to 7:30 a.m. And that is right here. So you can see if we're looking and hunting for relative equal highs, or we're studying the market data in the sort of pre-market session, which would be 7 to 9 for me, or 7 to 8:59 for me. There's not much here, and you can see how tight the action is over here. It kind of stays still. It's not doing much, but if you were to really wanting to analyze this, we have relative equal highs here. So this and this, and then that's taken out over here. Fair value gap, we have a little volume imbalance in there. So you would take this candle's high and this candle's low, which occurs right before 8:30. So the gap is made at 8:29. Extend that out. It works higher, 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 going into 9:30. Right over here, we trade lower, right? So right before that, we attack sell side here, and then what? Right over here, we have 9:30. We come up where? Low, high, lower low. I'm sorry. So then we have this mitigation block here. High, low, failure swing. Trades down, so break of structure, and then retraces back up into this down close candle right here, and then trades lower. So it would be this low that you're looking for, not the down close candle. And extend that out. 9:30 open, trades lower. This is what ICT was participating in. All of this, any executions made here, not me. Like, let's make that clear. They're good, but they weren't me. So I just want to make that abundantly clear to myself in the future, because that's something I was listening to in the lecture, and I cannot take credit for this. So I'm just saying that because I know that that's something I would have done as an old rookie retail trader. Like, I would have listened to someone else on a signal service, and had it been good, I would have thanked myself. Had it been bad, I would have blamed myself and the person who gave that signal. So I didn't know anything back then. Now things are different. So the 1 minute chart, I for some reason did not even show the executions. So we're gonna go here. Here are the executions on that. So I'll run through them real quick now that we're here. But here's the 850 macro first of all. So while it's trading into this imbalance that we left at 829, it is coming up into here at a time that we expect. Trades lower. Now it's forming a pattern, and that is a mitigation block. So high, low, failure swing, break of structure, retrace, 9:30 opening, premium. This is probably the highest point of premium that the algorithm offers, and it trades lower. So my personal insight, and this might not make sense to anyone listening to this, and if it doesn't, then don't even try to like make insights out of it, or like, what I'm thinking is the dollar went higher. Yeah. If we operate under the belief that there's a smart money algorithm that offers price to participants who know more than us, that ICT talks about, we know that the order block is a form of mitigation, not accumulation. Mitigation, not accumulation. So essentially, mitigation would be anyone mitigating a losing trade from their entry, basically. So what that would look like is anyone going long here and who ran this ride up and gets flipped on and is now underwater from this low, they have the option or the ability to mitigate over here. And so you'll see how this candle or this up close series, while it's not clean, it could be considered an order block. And you see price trades up into that and goes lower, melting below the opening range gap and new week opening gap over here. So this is the trade that I was talking about, and these are not exactly identical to ICT. You'll notice that I missed some trades. I also put in the wrong side of the marketplace, like he was selling, and I accidentally placed a buy order. So, well, it was really just a warm-up session, honestly, for me, like the first few trades. But I warmed up pretty well in the AM session, and I'll show you those executions now. So this one, right when I saw this before 9:30, I was a little confused, just because of the time. That's literally it. I wasn't looking at, oh, why is he shorting, and blah 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 blah. I was looking down here. Down here, it was 9:26, and I'm thinking to myself, why is he executing before 9:30? Something is up, and I guess we figured it out today. So you can see next execution here. So actually, this one I bought first and then I sold. So we had the execution after that at 9:39, and I sell one contract at 20,105.50. So that's on the 15-second chart. And if you go back into your notes, that's where ICT refers to that as a pyramid entry. So that was like a little pat on the back for me, because any pyramid entry, should be viewed as a base position, meaning if you're looking to pyramid, the way you should be looking at it is that I should be able to start a brand new position from here. So if that makes sense to you, then you probably took notes. If not, then you probably did. And then I sold that, I bought that back. Just two handles below. So I made about two handles on that. So break even. So once we went below, it was this low, or this one right here. As soon as we went below that low, I moved my stop to break even, and you can see it stopped me out right here on this candle, 9:43. Then next we had another sell at 9:45 right here, and this one bought back instantly, two handles, and this was just me kind of facing issues with the lag. So I think it was just people pushing a lot of buttons at the same time. So I didn't really have any high hopes for this. Like, this had no impact on me. I was wrong and I was right, and I felt neutral the entire time. Like, I wasn't stressed. Here's the thing, when I first started learning, I felt like sometimes when I was wrong, I felt like something genuinely changed, or I felt like I wasn't good enough at it. And now it's just insights. So I would love to dive deeper into that, but I gotta finish this video and then go to bed. So at 10:02, so entering the Silver Bullet after the news theater that occurred here. That's what I think it is. It's theater. ICT tells or prompts me or us to journal how you feel, angry or mad. And at the time, I didn't even enter the trade because I was kind of filtering as we were progressing into the first trade. I'm not warmed up. Second trade, I'm warming up. Third, fourth, I'm sort of easing back into things. And at the further we get, I think the more comfortable I'm getting with literally just placing orders, like using this. I was still kind of getting used to this. Originally, what I was doing is I was clicking create new order, and I was trying to hover over this candle, like right here or whatever, whatever the catalyst. But let's say I'm going short over here, using this fair value gap. I'm like going over here trying to see what the price is. So that that candle is 20.045.50. So I'm like looking at that like this, and then I'm trying to get all the way to the side and maintain that like that. And then I clicked the wrong thing, and I'm trying to swipe back up, and it was just really bad. What I learned is, instead of doing that, I can just do that and right click at the level. I don't have to move to the right, and I can do trade, and depending on where I click, it'll say sell limit or buy limit and all that. So it'll give me a much easier option where I can right click. And then so that is what I was using in the PM session. So let's continue back here. Sold one at 10:06 a.m. and bought it back down here at 10:09. So next one was 10:20. I bought one and sold right above this high over there at 10:23. So on average, the trades were about anywhere from 3 to 4 minutes each. That's the duration. So that's just the trade duration. 7 trades, 4 wins total, 3 losses, and 3 sells in the 4 wins, and then 1 long in that 4 win series. And then the losses, it was 1 sell and 2 longs. So alright, let's go to the PM session. This is where I'm gonna like outshine. Actually, I'm kind of tired now, but I did outshine here, I believe so. And I'm just gonna quickly recap this as fast as I can. And I'm not even gonna worry about it being perfect right now because this video is getting long. Alright, if I remember correctly, I log on my phone and I see this new week opening gap, and I see these levels here, and I'm looking at this and I'm thinking that this imbalance right here should show support in price because we shifted away from the new week opening gap, and now it's coming back down into it here. So you can see I was trying to get long at that new week opening gap right here. And I like this low. I spoke about that in the higher time frame. So, but being at work, there is just more distractions, like much more distractions. So stopped out here, break even, and my main point was I was trying not to lose. Obviously, I think everyone is, but I didn't feel comfortable holding the trade for what I saw. So this one, I actually spoke live in my Discord. So as it was going down on literally a 15-second chart, it's hard to visualize on a 1 minute, but as it's going down, I stopped out at break even, and I just mentioned that it's not likely, and then it stabbed into that low. So I'm happy with what I did. Buying here and then selling just a little bit above it. Just a tiny bit. Same thing. Bought, sold, same candle. Break even. You can see 19,860.25. 19,854.25. So a 6-handle loss, really. It's nothing, in my opinion. I wasn't worried. Try it one more time. 18,863. And then right here, 19,844.5. I get stopped out perfectly, right at the low. Right here, I knew what's going on. After I saw this candle, at a level like this, at the new week opening gap, when you see this low of day, and then you see these imbalances inside this new week opening gap, I like this, so I'm buying here. The catalyst for that was this consequent encroachment of the wick. So you can see right here. Sell that. Buying right here. Sold that. Buying right here. Sold that. So you can see that this trade right here, I used that consequent encroachment one more time. And then as it's rallying higher, expanding up, I'm just trying to sell at new highs or any expansion up. That's that's just a visual I try to go by. So if the candle is like printing higher, even on a 1 minute time frame, like I'm not looking at expansion above here. I'm just looking the nearest look back. So this high and this low. So had it went below this low, not as good. But because it expanded up higher, I'm selling into that. So right there. And then it came down and retraced into this volume imbalance and fair value gap. Bought right there, right around the wick. I was utilizing this wick at the time, and trades higher over here, and I target just below the relative equal lows over there. So then move higher and expand all the way up into here, which is the new week opening gap low, September 22nd. Bought one more at the order block right here. So if you see that, the 210 candle. So I'm trying to buy right there. And keep in mind, I'm adjusting all my limit orders as we're moving in throughout here and there. So I don't have an exact recording of the PM session, but these executions are good enough for my personal log. That's it. I happen to be uploading this to YouTube. That's it. Just because I want to get more content out there. So, and I'm sure people can find value in this. Because there is some good stuff in here, but I do want to say at the end of this that if these are awkward, because they feel a little awkward to me, I'm still getting used to this. I'm not used to talking so much. And that too, like genuinely out loud, because I talk a lot in my mind, and I have a lot of good phrases, ideas, visions in my head and analogies, but right when I hop on this, this live or this recording, I kind of go blank. Um, and I get nervous a little bit. So I was a little more comfortable live streaming, so I might do that. But let's talk about this. So after we closed out that macro and we went long inside that, and then so long before it and going into it, and then long after and exiting it, we create a high here, which I had wanted to see this wick, just this one, support price, which it did for a little bit. 1, 2, 3. We lost our footing here, and we trade up into it. Remember that 5-minute wick I told you about? I was trying to buy here. I get stopped out. Small loss. Once again, trying to buy here one more time. Small loss. Come back up into it, and look at the respect to the 0.5 level of that wick. So had I been a psycho, I would have went short here, but I just wanted to call it a day. And today was just a stepping outside my comfort zone. I think that I was so used to just taking one trade a day, 2 at max, on a 1 or 5 minute chart, and like waiting for like the highest probability. But today I really enjoyed losing. It was fun. It was painless. It was insightful. And that's kind of why I'm making this longer format video, because I enjoyed today. I wanted to log it, and I wanted to show my executions. I wanted to just push more content on YouTube, really. There's nothing else. So let me know if you found this interesting or insightful at all. And if you watched it, if you found anything to be sort of an eye-opener, or you also feel like you're in the same position with me in terms of working and trading. Yeah.